So I'm curious what some of the lessons you learned from being at a publicly traded company, having a big exit, being, you know, part of, I would assume, the equity team in this exit. Like, what are some walk away lessons that you had from that experience that have helped you with full focus?
Well, I think one of the things, and one of the reasons why I believe in coaching so much, is I think surrounding yourself with people that are smarter than you are, that have different skills and different experience is critically important. That kind of diversity for the talent pool is critically important. I think you've got to hire a rock star executive team. You can't do it all. And I think if you really want to scale and if you really want to grow, you've got to be willing as an entrepreneur to invest in the kind of human capital that it will take to get you there. But especially if you intend to go out and raise money, or even if the executive team is going to stay on and operate the business, what investors are looking for is a team they can invest in. Yeah, they're going to review the balance sheet. They're going to look at the cash flows. They're going to look at the EBITDA. They're going to look at the growth rate. They're going to look at all those kinds of metrics. But at the end of the day, a big part of it is subjective, and it's their assessment of the capability of the executive team, to really move the ball forward. They believe they're going to add value to it, obviously, but they really want a team that they can invest in and feel confident in. So it's worth making that investment. Plus, experienced people will help you avoid the mistakes that are so easy to make. Now, in that transaction, that was the first time I had really used big league, investment bankers and brokers and all that kind of stuff. And so there was definitely a learning curve. Part of the learning curve was that I didn't realize how much they were going to leverage the purchase. So the thing that was fascinating, because I was on the operating side and the other side of the sale. But so they bought it for $500 million. It was the most, we had a 13 and a half times EBITDA multiple.
That's incredible.
And so it was the most anybody had ever paid for a publishing company ever. And so, which I felt great about it until I realized, and I don't know, this is just my inexperience at the time. What I didn't realize is that the private equity was putting in 50 million, and they were expecting me to go out as the show pony to raise 450 million.
Whoa.
Which I did. And in fact,
Wow.
we were oversubscribed on the debt side by about 2x. So
Wow.
we had phenomenal margins, best margins in our industry. We had steady increase in our stock price for 7 years. And so we had a phenomenal story. The company had been in business since 1798. Now, I wasn't there that long, but it was an old company with a venerable heritage and a lot of bestsellers. And so it was, I was getting bankers that were, emailing me and saying, hey, how about if we go, golf down in Jacksonville for the weekend? And how about if I take, $10 million worth of that debt? So, I mean, it was just, I was really being courted and it felt good. All that was awesome until we hit the Great Recession. So we closed on the deal in 2005, and then we hit the Great Recession in 2008, and we were really over leveraged for that. I think the takeaway was that you really got to, if you do a deal like that, and I'm not sure I would do that kind of deal again, but if you do a deal like that, you got to really pay attention to the covenants. Yep. Because our cash flow was positive all through the Great Recession. We didn't lose money a single quarter, but our covenants got upside down because the ratios were screwed up. And unfortunately, when you've got private equity involved and when you've got institutional debt involved, if you get upside down on your covenants, then you have a lot of people trying to tell you what to do. And I really, really value my freedom. And so I didn't enjoy that very much. That was a really rough ride. But I will say that I probably learned some of the most important lessons I ever learned taking a company that size through the Great Recession.